Welcome back to another Calgary Real Estate Market Update with us here at Redline Real Estate Group on Redline TV. Today I'm going to be once again answering that question we always are asking ourselves. How is the real estate market? I'm going to be doing that with the data that was released from our Calgary Real Estate Board, as well as my own personal analysis to tell the full story for you today. Of course, this month we're going to be speaking about the data released for September 2020 in our October market update report. The first half of this video, I'm going to take you through the sales summary, the inventory story, and the pricing picture. Then I'll dive into our 3 advice segments, both for buyers, sellers, and I'll end it with our investor segment. So as always, sit back, grab a coffee, take out your notepad, and let's get to work. All right, first, let's get into our sales summary from the month of September 2020. Well, the results for September surprised many people, consumers, as well as industry insiders alike. But in my opinion, this story was already written when I showed you last month how far ahead we were doing with the leading indicator of sales, which was the showings. We were 145% ahead of last year's pace when I did this market update last month. Why? And how is this happening? As we've just gone through quite an incredible time with the pandemic and figuring out how to live in it, and of course, get our economy started again. That's above my pay grade, but the reality is it is happening and it's continuing here into the early parts of October. Let me pull up my first graph as it relates to September sales. Okay, as you'll notice on this graph, it's a big one. It covers 15 years of data. But what you will see, I put a red line across where we finished in September this year. There were only 3 years over the last 15 that surpassed this September that we just finished. And 2 of those years were our most recent boom years, which was 2013 and 2014. So all being said, that's pretty darn good. When we break this down into actual numbers, we outpaced last September by 25%. And then this is the breakdown between the 4 property types. Detached homes saw a massive increase of 28%. Semi-detached again did incredibly well, 22% increase. Row houses, I actually had to send a message into the board just to make sure they were comparing the same data sets over last year to make sure I wasn't providing you incorrect information, because their sales were up 48% over the same period last year. And then our sleepiest market, which continues to be the story, were apartments. They actually saw a slight decline of -1% in terms of their total sales. All right, this other chart that I'm going to pull up, I know there's a lot of data here, but I've circled the 3 sections that I want you to focus on. What this chart shows is that the month of September this year, when we put it into actual homes sold, surpassed last year's by 350 homes. What that's done, we've basically matched our second best month of the year. Then if I look back into the data above as well, we would basically be the second best month of 2019 once again. And that's here in a September. That's very rare. So it's safe to say in terms of sales, this September is one for the memory books. Okay, here's another graph once again to talk about sales. This one graphs the sales per day throughout the month of September. And once again, there's a slight trend line up throughout the month, which means sales per day increased the further we went into fall. Again, out of the norm, really nice to see for our economy right now. What this is also indicating is that October will likely be another strong sales month. Again, here's 2 more graphs just relating to sales. One shows the weekly sales versus last year and how far we were outpacing. Those numbers above 0 on this one graph show the whole month we completely crushed last year's sales in September. The other one shows 2 lines, the top line being 2020 and the bottom one 2019. You can see the gap in sales numbers between as we went through the month. It really wasn't even close. Now, as I mentioned earlier, this is not the same story for all 4 property types. And we've started to send out this advanced market update information on a monthly basis. So please, if you'd like to receive that detailed property-specific information, please just comment below or send a message directly into us so we can get you on that advanced market update email. Okay, I started this segment talking about the showing tracker from last month that predicted this incredible month. Let me go right back to that right now. When you look at this graph for the beginning of October. You're noticing there in the little details, it shows 120% increase. Well, last month we were crushing it, 145%, but going into October, we're basically the same. A great indicator that October and likely into November will be very strong. One thing to note, most people won't remember this, but last year in September, we did have a bit of a dip, and then October was a significant rebound in sales. Okay, that's it for the sales summary. A pretty rosy picture overall, except for our apartment market. When I dig into that, we're seeing about 7 to 8 sales per day in the apartment market. And with that, an average new listing count of about 19. With an already oversupplied active set of inventory, the apartment market's going to need a significant change before we start to see positive signs in that market, just like the others are having. All right, let's switch it over now to the inventory story. Okay, let's start off by pulling up this graph here. This is the listings per day. What you'll see here, which is the opposite of the sales, is that the trend line is going downward. This is what we'd expect to see as we transition into fall. Now in this next graph, this one shows how we were doing in regards to new listings week over week in relation to last year. What you will see is most of the month we sat below zero, which means on a weekly basis, we were listing less new homes than we were at this time last year. All of this sums up to our third graph right here. As you will see, we finished the month with 12% less active inventory than this time last year. That equates to about 865 homes less on the market. Now, just like the sales summary, the inventory story is the same. It's different in all 4 markets. The detached homes, we finished the month with 18% less inventory. The semi-detached market, 28% less inventory. The row homes, pretty close, minus 4% versus last year. And then our outlier again, the apartment market, it actually saw a 1% increase in inventory. So it's safe to say that the detached and the semi-detached markets are performing very healthy. With that much less inventory on the market, it does provide a buffer for those two to deal with some sales declines that will likely come in the months to come. This next graph I wanted to pull up shows again the 15-year history of where our inventory position is. When you look at that red line again that I put on the graph, what do you see? Well, we're kind of right in the middle of the last 15 years. But more recently, we are the lowest active inventory than we've been at this time of the year, going back for the last 4, which is our recent memory. Okay, that's it for our inventory. Let's flip now over to our pricing picture. Let's start with the straight facts. As a city, we've seen a benchmark price increase ever since June, from June, July, August, and now into September. In June, we saw the city have an average benchmark price of $411,000. We've trended up month by month, and here as we finish September, we're up to $421,000. As we relate this to last year, we're 0.2% lower than last year. Not too bad compared to what we've all gone through. Now again, we are completely different for all 4 property types. Detached saw a little bump at 0.9%. Semis declined by 1.8. Row house, the biggest adjustment, it's seen a decline of minus 7.1. And despite all the daggers thrown at the apartment market, it did okay. Year over year, only 0.4% decline. Now this graph is pretty neat. It's a new one. It shows the breakdown among the 8 districts in the city. So as you'll see, across the 8 districts, everyone operated a little differently, and this might help you understand which part of the market you might be in. Now, the best indicator of what our market is actually doing and what's to come isn't just looking at those year-over-year metrics. Last month, I showed you a little glimpse of this color-coded legend that I created to help justify where we were positioned. Again, let me add that up again here for you. You'll see green, yellow, and red on here. Green means, in terms of pricing, this is a good thing. Red means not so good. Yellow means it really doesn't matter a ton, which means it's not a negative. There are 30 fields in this little color-coded box. 26 of them aren't red, which at this time of the year provides me some pretty good confidence, at least in the short term, that our pricing situation won't be in much jeopardy as we transition through these next couple months in the fall. When I pull up this big graph, this one will overwhelm you. There's so much data, there's so many boxes, and we're not going to go into it. But what I wanted to tell you about this is there is so much to analyze for the specific situation that you're buying or selling in. And make sure that your real estate advisor is providing you that level of detail. Okay, that's it for our sales summary, inventory story, and our pricing picture. Now we'll switch over to our advice segments. Okay, welcome to my advice for buyers segment. What do you need to know as you're buying or thinking about buying in the fall, winter right now? Okay, firstly, the listings per day numbers are on a decline, and they'll continue to decline through October, November, December, January, and then start to pick up in February. So what does that mean for you? If you're just entering the market or you're already on and you haven't found that dream home yet, you're going to have less selection day by day as the months, these next 5 months, go along. Secondly, as I discussed earlier, the inventory is significantly lower for most of the market, which basically leaves you less homes on the market to comb through to find that perfect fit for you, with an exception of that apartment market and the row right now too. But the good news is any seller coming to market now or any seller remaining on the market for the back quarter of 2020, they're there for a reason. They want to sell. So as we get a little bit closer to Christmas, we'll see the motivations of sellers rise because they want to achieve that sale before going into the deep parts of the winter. When motivations rise, deals are also out there for you. But I'll caveat that statement a little bit. When inventory is so low and sales are doing much better than we expected, good priced, fair priced homes will move really quickly, so be ready. So to sum all this up, if you want to buy, you're excited to buy, and you're taking advantage of this incredible low interest rate environment, be sharp. So have your search dialed in and make sure the agent that's working for you is ultra responsive so that that one best fit doesn't miss you by. Okay, now my advice for the sellers out there. Okay, if you've been listening to this whole report and you're a seller, you're about to hit the market, you're probably feeling pretty good. And honestly, I wouldn't blame you for that either. But for you, I want you to lean into this message even more. Confidence can be a major trap, and I'm seeing it all over the market right now. Let me explain. I'm gonna pull up this graph. This is something that we coach and show our agents internally here at Redline, and I wanted to let you in behind the curtain on this one. This chart right here shows the natural sequence of events and the mindset when a seller goes to market. And then after you do so, as the time on market increases, you'll see on the graph how a few things subtly change. At this time of the year, I am calling it the shift, because the shift of the market is about to happen as those seasonal adjustments are upon us. All right, the top of this chart shows the dollar amount that the seller wants when they've come to market. But at this time of the year, as the property sits on the market, the value that the buyers place on your home starts to adjust. It starts to shift. It starts to decline. As a seller, it's very easy to take your eye off the prize and not notice this is happening, which creates a gap between the buyer's expectation of value and what you, the seller, believe it can sell for. Let me pull up this second chart that shows this in better detail. It's this dark green line that I want your eyes to go to. You'll see when we launch, it peaks. But then in a shifted market, which is right now, you'll see it drop off pretty sharply. And what that is the drop off of a buyer's perception of your value. You notice this graph versus the last graph, that gap between seller's expectation and buyer's willing to pay has grown more. That grows more in a shifted, seasonally adjusted market, which we're just about to enter. What do you also know? As you start to correct and make price adjustments, you still are missing the mark when it comes to what the buyers are willing to pay. Now, this is that confidence trap that I don't want you to get caught into. Be confident, be optimistic, but don't be aspirational or you'll be caught there. Let's not play there, because you will be the ones sitting throughout those cold, deep Calgary winters. One more thing I wanted to say. In a good market, it's pretty simple. You're either getting it sold or you're not. You're either in the market or you're out, just like this graph shows. But in a shifted market, a new band pops up on that graph. You're either in the market, you're out of the market, but this band is called no man's land. No man's land means this: you're getting showings, you're feeling confident. You're getting more showings, you're feeling confident. But what are you not getting? You're not getting second showings from the same buyers, and you're not even getting feeler offers. So as you come to market and that's happening, trust me, the market knows you're out there. The power of our realestate.ca and the MLS system is immense. Most of the people out there looking are getting your property in their eyes. And then when you're partnered with a firm like ours with the extra layer of marketing, there's no doubt that all stones have been left unturned to find you that buyer. So as a result of that shifted market, what'd you notice on the graph? That in the market zone got much smaller, didn't it? Because that no man's land band has entered the picture. So the sooner you can adjust out of no man's land and get yourself into the market, when I'm telling you the leading indicator of showings and sales are out there, you know you will have hit it, you'll get an offer, and you'll move on happily. So as a seller, we're positioned better than we ever thought we would when we started going through the pandemic. So don't waste this opportunity by being overconfident or aspirational. Of course, selling and pricing and the strategies involved is an art form. You need experience on your side. So if you want a consult on what you're looking to achieve for your family, please reach out to us and we'll connect you with a local community expert. All right, let's start with our investors segment, one of my favorite parts of this update. Okay, last month I said, before listening to this, go back and listen to the other 5. Again, please do that right now, and then dive into this message here. Okay, the message for investors is twofold today. Well, number 1, builders, builders, builders. Builders are so hungry right now. Our firm is in constant discussion with builders all around Calgary, trying to find creative solutions to tap into the buyers out there. That means you too, investors, they want to satisfy what you're looking for. We're seeing this in pre-sale condos with offerings. We're seeing this with semi-detached, row houses, properties with suites. They are getting creative. So please, if you're an investor looking to buy something turnkey, take advantage of all of this creativity being used out there with firms like ours, builders, and even property managers. Please reach out so we can discuss what might fit for your portfolio. Now, if you're looking for resale properties, based on what I showed you before this, October is not going to be your month for deal hunting. Maybe not even in November. We might need to wait till the depths of the winter. So if you can wait and you want to wait, maybe just do that. Now further, if you're in the resale market and you want to know what you're up against, what I mean by that is, as an investor myself, I wanted to even go deeper with the data. I've been diving into the different property types and price ranges and manipulating that to give me some laser focus on where I should attack and maybe where I should change my expectations. Let me quickly pull up these 3 pie charts, and what I want you to see is look at it, look at the shape, then I'll flip over another graph, look at this one, look at the shape, look at the adjustments, and here pull up the 3rd one. Again, you'll see the shape, the size, the ratios. Now, lots of info in here, but now that you've seen all these charts, what do you see? What it's telling us is that based on the property type and the specific price ranges that are being sold year to date in each one, that there's a massive difference in where the traffic is. If you're buying strategically to get the best deal today, maybe buy under market. If you're attacking into those areas where everybody else is buying with those resale homeowners, you're gonna have a hard time getting that sweetheart deal. With this level of detail, we can walk through and create an incredible strategy to find out where you can pinpoint your next deal hunting exercise. To me, I love this because it gives us an unfair advantage over the other agents out there. So come on, let's have a chat. Again, this info is also going to be provided in our advanced monthly market email series. So if you want that info, just reach out. We'll get you on there right away. Okay, well that's it. That was my monthly mouthful in terms of the September 2020 data, and here our October market update. Thanks for tuning in, thanks for watching and listening to all of this, and thanks for sharing this forward, giving us the likes, and keep coming back to our channel. I love doing this. I think you can sense the passion in making sure you're the most educated set of consumers out there in the marketplace. So once again, until next month, hope to talk to you in between.